What's up, guys? Thanks for tuning in. We are looking at a 4-hour time frame with prices breaking through the ceiling of this 35-point bearish order block via a strong bullish bar. Judging by the buy side's dominant presence, along with the progression of this stair-stepping pattern, which, by the way, intensifies its upside following the creation of this order block just below the 3780 level. And let's go ahead and switch to a 1-minute time frame here. Now, all this price movement that starts with a 30-minute time frame imbalance and stop hunt expedition, and then aggressively expands through the 3857 level, all this price action anticipates, in my view, a change in the price's directional bias. As we all know, price changes are neither random nor occur by chance. They result from either an accumulation phase or a distribution phase. For those new to day trading, these two phases can be seen by looking at the volume of the security. If there is high volume during an accumulation phase, it means that traders and financial interests are buying the security, which will likely lead to a price increase. Similarly, if there is high volume during a distribution phase, it means that traders are selling the security, which could lead to a price decline. As a result, price changes are not random or occurring by chance, but rather a result of accumulation or distribution phases. It should be noted that while both of these dynamics provide valuable information about the market, they should not be used as standalone signals when it comes to improving the odds of a successful trade. Instead, traders should use them in combination with other technical elements to get a more complete picture of what is happening in the market. Now, getting back to our point of interest, the reason why I am considering a potential short entry at this particular level is because, and apart from the fact we are overextended and trading at a level that I think seems not sustainable, we are also close to testing a strong resistance zone that could impact the price's directional bias. Furthermore, the current price movements seem to be conducive for a move to the downside. And what I mean by that is that if we switch for a second here to a 4-hour time frame, we would see that logically the market has no reason to keep uptrending, given that both of these imbalance areas over here, both of these areas have already been balanced. Additionally, this double top pattern is followed by these lower highs, further making the case for more bearish momentum build-up. Obviously, this could lead to a sell-off in the near term. So basically, this is our cap right here. That said, though, while this may look like the right moment to enter a short position, it's important to always be patient and not rush into things. And as I've stressed many times before in my videos, the more confirmation before taking any actions, the better it is. In this trade, and as we move to a 1-minute chart, in this trade I was looking for one more confirmation that would suggest market would continue lower. That proof came when price entered into a 3-minute time frame imbalance zone. On top of that, this stacked imbalance zone down here would serve, I thought, as a price magnet. So based on all these observations, I decided to enter the market short. Okay, so I guess we are done with trade number 1, so let's go ahead and move on to the next trade.
Target filled.
As we look at the daily chart, and more specifically at this part of the trading range, we can easily identify these two order block levels. Order blocks are price levels where large orders have been placed by hedge funds or large financial interests. These orders can create a short-term imbalance in the market and cause prices to move in a particular direction. In the financial markets, order block levels are often used by traders to identify potential areas of support and resistance. In this instance, we can see that there are two order block levels in play. The first one is at around 39.70, which is our price target, while the second one is at the 39.30 area, which indicates strong resistance. And by the way, the confluence of this resistance level and this break in market structure was the main reason for my long bias. So by identifying these order block levels, we can make more informed decisions about where to enter and exit our trade. With this part explained, let's move on to a 2-minute time frame. Starting from this liquidity grab area down here, you can see we rallied up, dropped down, and then consolidated rather nicely for about an hour or so before surging higher. Usually, I'd like to point out that usually I don't chase, but this breakout, no matter how you analyze it, was a screaming buy.
Order filled.
By the way, for those new to day trading, a breakout occurs when the price of an asset breaks out of a period of consolidation or range-bound trading and moves into a trend. When this happens, it is often seen as a signal that momentum is picking up and that the price is likely to continue moving in the direction of the breakout. In the case of our breakout, arguably price had been in a breakout mode from the 39.33 level, but this break in market structure is what actually really convinced me to enter the trade. And again, I don't recommend you guys chase, but the assumption here was that under such favorable breakout conditions, I assumed that all the resistance level would turn into a new support level. So after this brief pullback here, I decided to pull the trigger. I think that this was one of those trades where no matter what your market strategy is, you need to be able to spot a good opportunity when you see one, and obviously go for it. But again here, always if things confirmation-wise make sense and fall into place.
Target filled.
Alright guys, so that should do it for today. Thanks again for watching, and as always, if you liked the video, please make sure to like and subscribe to the channel. I would really appreciate it. Thanks again, and until next time.
Target filled.